Hello, everyone. Welcome to this event on greening the financial system, policy options for monetary and financial authorities in Latin America. I'm Uribe. I'm the director of the Center for Sustainable Finance at SOAS, University of London. And I'm delighted to have the opportunity to chair today's discussion, which is jointly organized by the E-Access Forum and the Center for Sustainable Finance at SOAS, University of London. So greening the financial system has become a really hot topic around the world, both in advanced as well as developing and emerging economies. And today we will discuss what central banks and supervisors in Latin America have been doing thus far to address environmental sustainability risks and green the financial system, but importantly also looking forward what courses of action they may take in the future to address these issues. And so I started working on financial governance issues and how to address environmental climate risk a good decade ago, and that was a very esoteric topic back then, but it has become really a major issue, and central banks and supervisors are really dedicating a lot of attention and also increasingly resources to addressing environmental issues. And the cast of speakers I have with me today is in many ways a reflection, because each of them has a leading role at their own institution on advancing the sustainability agenda and kind of charting the strategy of their institution in that respect. So let me very briefly introduce the panel. We have, so I'm going in alphabetical order. We have Mariana Escobar, who is head of sustainable finance at the Superintendencia Financiera de Colombia. She has worked in a lot previously on financial inclusion and sustainable banking. She has served as a public policy advisor to the director of the Department of Social Prosperity. She was the Deputy Director of Postal Affairs at the Ministry of Information Technology and Communications, where she also supported the financial inclusion agenda and the development of fintech in Colombia. And earlier on in her career, she served as City Colombia Sustainability Manager and was also a senior consultant for BSD Consulting. So she also has this private sector background in sustainable finance. Mariana, it's great to have you. We will also hear from Carolina Flores, who is head of market development unit in the research division and also the coordinator of the climate change task force at the Commission for the Financial Market of Chile. Chile's supervisor of banking, securities and insurance markets. And Carolina has worked on different financial regulation issues, so she's been also a driving force in the work on fintech and cybersecurity, but now, as mentioned, she's leading the climate work. And then last but not least, we will hear from Rafael Villar, who's an advisor to the governor of the Banco de Mexico on green finance. And Rafael is also affiliated to the Instituto Tecnológico Autónomo de Mexico. And Rafael has been really a key player for a long time in the world of central banks and green finance. He has been part of the Green Finance Study Group of the G20 from 2016 to 2018, and he's played a very leading role in the network of central banks and supervisors for greening the financial system, where he's leading the market dynamics group. Rafael has a PhD from the University of Pennsylvania and has also worked as an academic and a professor of economics at the University of Texas A&M and also at ITAM. So I'm really, really happy to have Carolina, Mariana, and Rafael with me today. And I would very much like to invite them to each give some brief opening statements around 7 to 10 minutes to hear what their respective institutions have been doing to advance sustainable finance, but also to hear, what things are on the agenda going forward. And then we'll have an open discussion, and we warmly invite all the participants to bring in questions. So please use the Q&A function. It's also okay to use the you can write your questions in Spanish. The answers will be in English, but so don't let a language barrier be a problem if you want to write in Spanish. Good. And just one final thing from me now. My colleague Adrian will put some questions to you. So you will have some questions popping up in a moment, some surveys. So please fill them in. But first, now we will hear from our panel. So let me invite Mariana to go first. And again, thanks so much for being with us, and looking forward to hear what you have to tell us.
Thank you, Uli, and thank you for the invitation to participate in this panel and to share the Superintendencia's perspective, and I guess the Latin American perspective on these issues that it's important is increased very rapidly. So thank you very much, all the organizers, for this invite. For those who do not know, the Superintendencia Financiera is the primary financial supervisory authority for the country. So it's in charge of not only supervision, but also is in charge of inspection, supervision of financial institutions, including banks, insurance, pension funds, capital market participants, and some payments processors. So we have a wide range of organizations and institutions and industry we supervise on the same organization, and that actually kind of gives away, or it explains a lot what the Superintendencia is doing and the roadmap it identified for greening the financial system. So in order to start a little bit chronologically, the Superintendencia in its strategy, annual strategy, project called Green Finance, and its initial drive, to be honest, was the growing. We saw a growing. We started seeing a lot of green issuance in the country, especially from the private sector. Actually, we did not start this market with a sovereign bond issuance. We started with the private banks, actually, which are the biggest issuers in Colombia, to issue their green bonds. So we wanted to understand how we could promote and use these green bonds in order to promote green finance. However, after we reviewed with our peers, we understood the international discussion, we decided to broaden up its objectives. So we developed a strategy that was not only focused on the green finance, but also promoting green finance as the opportunity, but also promoting a better risk management system of environmental issues. So we started with this comprehensive plan that included not only hard regulation, but also soft regulation. We needed to give some guidance, and we needed to publish some expectations for the institutions we supervise. So we launched in 2000, November 2018, we launched a survey that kind of gave us a roadmap and an understanding of what the market was going through. This action plan in Colombia looked for three main objectives. The first one was harmonize concepts. The second one was to standardize data. And the third one was to level or equalize knowledge within the different industries. In Colombia, the banks, and we got this from the survey, banks were much more developed in their sustainability strategy than, for example, institutional investors. Pension funds administrators, for example, didn't have anything in place. So we needed to level the playing field in this matter. The projects we select in order to reach these objectives of these I guess these building blocks where I'm going to focus on three. The first one is ESG integration, of its integration. So we are working both with issuers and with institutional investors in order to first harmonize their understanding of what ESG integration means for the supervisor. And this is really from a risk perspective. We're very much focused on this integration from a risk perspective. We've also been working with issuers in order to understand how to better, and I know this is an international discussion, how to better or how to improve the quality, comparability of data, of ESG data. And we're developing first preliminary document in order to understand where the market is at regarding these issues. The second initiative, it's obviously related to climate risk assessments and stress tests. We started some exploratory exercises here in Colombia with both bank and pension fund administrators in order to see how exposed the system is to physical and transition risks. Actually, the exercise we're doing with banks is with the Central Bank of Colombia. We always do these stress tests, especially the top-down stress tests with the central bank. So we're working with them on a vulnerability analysis. It's a very simple exercise for both physical and transition risks. For the pension fund administrators, we've been working with 2 Degrees Investing Initiative. I guess many people are aware of this organization and the work they do. And we did a preliminary exercise in order to see how exposed they were to just transition risks. Both exercises, again, are exploratory. And what to is information, is try to understand where we're at, what data do we need, how we should move forward to kind of test out with the institutions their level of knowledge on these issues. So it's just a starting point to try to have the same definitions and the same approach and start encouraging financial institutions and our supervised institutions to move forward. Finally, the third initiative I want to highlight is the one related to the Colombian green taxonomy. This is an issue that most people that work on this area of green finance are aware of. We decided in Colombia to start developing a green taxonomy. Obviously, our starting point was the taxonomies that were already in place, the monitoring verification systems we have for climate change investments. So we took it from there, and we started working with the Ministry of Finance, the Ministry of Environment, the National Planning Department, and the National Statistics Department to develop this taxonomy. We already have a draft of this taxonomy. It covers 8 sectors, 54 activities or assets, and it's probably going to launch in the next couple of months. It's now being revised by these organizations. It's in the phase of peer review, and we hopefully have a taxonomy by the mid-year this year. With the challenges in the future, I guess the harmonization of concepts is going to still be a major challenge. How to harmonize concepts concepts without limiting innovation. This works for both the taxonomy of activities, but also a possible taxonomy of products. When we engage with institutional investors in Colombia, we realize there is a lot of confusion on the ESG landscape. What does it mean? How are the different strategies implemented? And I think we still need to do some work in that front. The second one is obviously data availability. And as you know, this is not going only to cover climate data, but it also should cover, for example, biodiversity data that is even harder to capture. and especially for Colombia, biodiversity, it's a concept that it's key to its development. So it's an objective that's key to our development. And at the same time, it's also a matter of, as Rafa and Carolina is also going to agree, it's of proportionality. How do we standardize data without increasing the costs, for example, for SMEs? Our country is built on SMEs, and increasing their costs, it's not necessarily the best way to move forward. So that proportionality concept in the data standardization, it's key, it's a challenge. And last but not least, I think the capacity and knowledge, keeping up the pace for the Colombian markets, it's still a challenge. So, and you need to move with the market on these issues. They need to be convinced, and the level of, and the pace on how these issues are being brought up in the market and by other supervisors could be a challenge, or is a challenge for us in the future. So I'll stop here and leave let Carolina move on with the session.
Thank you so much, Mariana. That was really a very rich introduction. And indeed, I'd like to invite Carolina to tell us of the work you and colleagues have been doing in Chile. The floor is yours, please.
Okay, thank you, Alrich, for this invitation. Okay, it is estimated that about a quarter of Chile's domestic product is made up of sectors whose productivity and stability can be impacted by the climate change, such as mining, the food industry, the agriculture, forestry, and fishing, electricity, gas, water, and water management markets. The Financial Market Commission has been working on a specific sustainability framework for some years. This frame will be published in the next few days for the second time for public comment. And the idea is that the different issues of security publish information that demonstrates to the investor the degree of commitment to sustainability. One part of this framework is the climate change. What's more, the last September, the Financial Market Commission approved the institution's climate change strategy. The objectives include analyzing and studying how climate risk can affect the financial system. In particular, the objectives are related to the three legal mandates of the institution: prudential supervision, market development, and disclosure for market discipline. The most important point in this document was this message. The Commission Council recognized that the risk associated with climate change are potential financial risk, and therefore the Commission cannot fail to act in response to them under the legal mandate that governs it. Also, last year, the CMF created a special working group in the institution with the sole mission to study, analyze the way in which the climate change impacts the financial sector and how it can be managed and controlled. I am the coordinator of this group. Okay, thank you. Thank you again for the invitation.
Thank you so much, Carolina. And now I'd like to hand over to Rafael to report from Mexico and the Banco Mexico on what you've been doing, and also maybe, you know, where you've got your eyesight on what's coming next. Rafael, the floor is yours.
Well, thank you very much, Uli, for the invitation, and it's a pleasure to be with Mariana and Carolina. Good to meet you, Carolina. Mariana is an old friend. Thank you so much. First, I'm coming from the perspective of a central bank. No? I work at the Banco de Mexico, which is the Mexico's central bank, in the office of the governor, as you well pointed out, Uli. And so I would like to start saying that, you know, in addition to price stability, Banco de Mexico has two secondary objectives. One is the healthy development of the financial system. and also the good functioning of the payment system. So in addition, I should say that the governor of Banco de Mexico is an economic advisor to the president of the Republic. So I want to stress this to both the advisory role and the economic advisory role, and also this secondary goal that Banco de Mexico has in terms of the healthy development of the financial system. And so why? Because of course, Banco de Mexico now, as you well pointed out, for a few years, has been sort of evangelizing within the financial system in the country in terms of saying that climate risks, environmental risks more generally, are some of elements of this climate and environmental risks are material risks, are risks that financial institutions should start recognizing as relevant, and therefore have to upgrade their tools and their methodologies. And of course, in line with what Mariana and Carolina just mentioned, of course, we have a very big issue related to information and disclosure. And this is, of course, taken internationally as well. So the important thing for the healthy development, and that is, of course, closely linked to financial stability as well. The point about the healthy development of the financial system is that we need to retool, to upgrade methodologies in terms of this risk analysis. And in doing so, of course, issues related, as I mentioned, related to information, to disclosure, it become extremely relevant. Now, of course, Mexico is an open economy, and it's an economy that is very closely connected to the international world. And therefore, it is very important to realize that international initiatives that are at the forefront of these developments of methodologies, of tools, of disclosure, of information, are very, very important to us. And so, of course, as relates to disclosure, we are very closely monitoring the very important work that is being undertaken, not only as within the TCFD framework, the Task Force on Climate-Related Financial Disclosures recommendations, but also, the alignment of other disclosure standards to the TCFD, and the role that this alignment is going to play with important organizations such as IOSCO and the NGFS, for instance, in terms of the network, these acronyms, the Network for Greening the Financial System, the Central Banks and Supervisors Network for Greening the Financial System, in terms of, supporting this this movement, this retooling, these new methodologies being implemented in the financial systems. So I think it is very interesting to understand also that accounting standards bodies are through the IFRS are already, quite advanced. They have already set up a prototype with IOSCO in terms of establishing a prototype a template for a sustainability accounting. So let me take now one step back and talk a little bit more in terms of a analytical analytically. So disclosure and reporting is absolutely central, and information related to climate, environment, and sustainability more generally are essential for creating awareness within firms, and financial and non-financial firms. So this is one very important point. This awareness, of course, feeds back into risk analysis. Why? Because precisely awareness creates the impetus for precisely making understanding that this information is very valuable, and is of course feeding back again, as I said, to understanding the risks and ability to manage them. No, so it enables market participants to better price and internalize the externalities caused by climate change. And it also allows authorities, to monitor and to stress test the resilience of the financial system to climate risks under different scenarios. No, so by incorporating climate and sustainability factors that are material, that are relevant into decision-making processes, they become aware of the relevance and the climate risks, methodologies, facilitates the adequate pricing of assets, and reinforces the views that these risks are a source of financial risks. And this is where, of course, central banks come in. No, I think this narrative, which is of course international narrative, it's not my narrative. It's now very quickly becoming, or has already become, the fundamental narrative in terms of how to go forward. Is of course deeply intertwined with the mobilization of capital towards environmentally friendly activities and technologies, because precisely this higher visibility of who is doing the right thing is of course something that investors are taking note of it, and of course are moving are enticing mobilization towards these activities. So very briefly, 2 words, 2 minutes or 1 minute on what we're doing in Mexico concretely. At the initiative of the governor of Banco de Mexico, last year, a sustainable finance committee was set up within the Financial Stability Council. And this committee is looking at the issues that are now commonly perceived to be the pillars for this agenda: taxonomies, capital mobilization, risk management, and reporting, disclosure, and standards. No, and this committee, what is very interesting about this institutional setup is that this committee is not only authorities are not the only ones that participate in this committee, but this committee has a key participation of private financial associations in the country, and also, very interestingly, the office that is in charge of the Sustainable Development Goals, in the implementation of the Sustainable Development Goals. So with that, I would stop my introductory remark. Thank you, Oli.
Thank you very much, Rafael. Also very, very rich intro remarks. So I'm sure there's a lot to pick up, and I'd like to invite all participants to make use of the Q&A function. I should just say, in personal matters, my computer seems to be disintegrating right now, so I hope I will be able to see the Q&A questions properly, but as far as I can see, so far there haven't been any, but so let the questions come in. I think you've all very much highlighted the risk dimension. So clearly there is a very strong rationale for both supervisors and central banks to step in. Rafael, I think that has been a very important part of the work of the G20 Green Finance and Sustainable Finance Working Group, and importantly also the NGFS, to really make clear that this is not just some, you know, green central bankers, supervisors who feel like, you know, would be nice to do something, but that this is very much at the core of your mandate to address these risks. And I think we are increasingly getting a feel that these risks are not just material, but actually very large. And I think, Carolina, you mentioned that a quarter of Chile's economy is actually very highly exposed. And so clearly managing and mitigating these risks really needs to take center place. And you also all refer to the importance of data and transparency. So there are now increasing calls, including from people like Mark Carney, that we really need to have mandatory disclosures. And of course, the discussions have been going on around climate-related disclosures, and we have the TCFD framework. Now we also have work on disclosure of other environmental risks, biodiversity risks, and Mariana also mentioned biodiversity risk as a major risk for Colombia and Colombia's economy. So what are your what do you envisage in terms of disclosure regimes going forward? Are we going to see in your jurisdictions kind of very comprehensive mandatory disclosures, or is, you know, are you still looking at voluntary approaches?
I can start answering, I guess. To be honest, I'm going to be very honest here. The disclosure objective, they need to improve the relevance, the comparability, the quality of the ESG data, and there has been, from my personal perspective and experience, public policy challenge. You need to balance the needs of the investor. You need to balance the cost for the issues on improving and making a regulatory effort. As Rafael may also have these discussions moving really, really fast internationally, especially one led by Flores, that, if I'm not mistaken, just announced the creation of this working group. So for us, the biggest challenge, and for me particularly, the biggest challenge here is to make the decision where to start. And what's the best way for the Colombian market in order to provide that security and that information, or that protection to the investors, so they can rely on the information that is out there, at the same time promote capital markets profundization. So yeah, it's a challenge. What we took was, we first needed to understand where we were at. Colombia, for some reason, is the fifth country with the most GRI under the GRI standards. Is one of the 5 countries in the world with most GRI reports. So we do have information. Issuers, especially the ones that are public companies are kind of used to having these reports. However, when we did the analysis, we saw three particular things. The first one, their materiality, whichever description or understanding they have of materiality is not very well done. You had certain companies in certain sectors that weren't disclosing information that you know from kind of common sense that they need to have. The second one, they were not covering a lot of environmental information. So they focus a lot more on the social issues when disclosing and doing these reports. And the third one was, obviously, they did not have information that looks into the future, that's trying to see, this is where I want to go, this is where my roadmap for being more sustainable is at. So that was the first step. The second one, so we understood this kind of panorama, where we were working with. Then the second one was issuing this or making public these results, kind of start making awareness and telling the market, look, we are worried, this is what we found, and this information is key and it's needed by investors. So what we're seeing from the international discussions are these issues, and we eventually reach out to keep the dialogue open. So that was the second step we took. We have right now a document that is published in our website with the summary of our approach or understanding on the issue, including the analysis we did on the issuers' practices on disclosing this information. And the last one, and it's going to come also in the next months probably or weeks, we're gonna set up working tables. So we're gonna try to understand the issuer's perspective and the investor's perspective and start answering some of these key questions that, from what we have seen, are common questions that the IFRS has, questions that the SEC has, that the European have. Which concept of materiality should we introduce? Should we introduce first single materiality, financial materiality, and then double or dynamic materiality? Should we standardize certain key indicators? Should it be some principle based? Should we wait for the IFRS to issue something? So those are the questions that we want to kind of start talking with these issuers to then later make a decision of the way to move forward.
Thank you, Mariana. Clearly, you've thought a lot about these issues already, and great to see a lot of work coming forward. Carolina, Rafael, what's your take on this?
Okay, I continue. Okay. In Chile, the proposal is the information is mandatory because it's part of an annual report. But for each sector, the indicators are different, similar to as a SASB, but in sustainability in general. But in climate change in particular, the idea is the companies show information has a TCFD standard. Because TCFD standard in particular is the way you show comparison. It's the same rule for all for every companies. But this is a proposal in this moment because I talk the rule, the framework will be public in the next days. The people can give commentaries about this.
Okay, so basically TCFD disclosure is on the cards, but it still is to be decided.
TCFD is the rule for when the topic is a specific climate change, but for the sustainability is more is SASB or others. It's a mix.
All right, thank you. Rafael.
Thank you. So let me let me try to address the question you raised, Uli. First, but let me take a step back initially. So we know that the PRI, the Principles for Responsible Investment, which, we have signatories that are in the order of close to 100 US trillion dollars in asset management that are, we have, very big pension funds. We have huge asset managers like State Street, Vanguard, BlackRock, that have already signed into these principles of responsible investment. And within the principles for responsible investment, what we have is a commitment of investors to foster, to promote TCFD disclosures within the companies they invest in. So that this is an extremely powerful engine of adoption of TCFD. Now, if we go into, say, international organizations like the Financial Stability Board, we have, or the NGFS, we have a very clear recommendations from this very powerful international financial institutions in terms of adoption of TCFD. And this, and as you well pointed out, Mark Carney has been pushing this agenda from the UN now, where he is leading. So I think what we're seeing is very clearly, immense pressure on firms to start disclosing, and it is recognized very much. It's very fast moving, but very fast. The TCFD is becoming the preeminent disclosure framework for climate, and this is as again very fast happening. Being coming from an emerging market again, I think it's fundamental to understand first what is it that where the consensus is coming to international within the financial authorities fora like the FSB, as I mentioned, or the NGFS, and at the same time understanding the market forces that are behind the adoption of this comparable and also very much risk-based financial, and I will underline the word financial, materiality concept that is behind the TCFD. Now, the TCFD, well, is a set of is a set of recommendations based on 4 pillars: governance, strategy, objectives and metrics, but to support disclosure is very much important, and I'm happy that Mariana mentioned the GRI and Carolina mentioned SASB, Sustainable Accounting Standards Board, Global Reporting Initiative. These standards are very, GRI is a pretty old standard, more qualitative in nature, and SASB is a much more recent standard. It's only 10 years old, and this standard is very much, focused on what the investors are looking for in terms of disclosure for firms. So it is, these standards are not are complementary to each other. These standards are, as I said, have done immense amount of work, and they are also comparing themselves. And this is very, I want to underline it, they are comparing themselves to TCFD. So you can think of, in terms of, if you think of this as a construction, as a building, you have sort of a foundational stone being the TCFD, and these other different standards looking, for instance, GRI is looking at different stakeholders, while SASB is looking at investors, you know, as their main stakeholders. So GRI may be looking at employees, maybe looking at consumers, you know, they have a very broad scope, and this other standard is a much more, SASB is much more precise. So I don't think that, and before I finish, I just want to stress a recommendation, a declaration, to put it back in better words, a declaration made by the Green Finance Council, which is a private council comprised of all private associations, financial associations in Mexico. So they issued a very interesting declaration back in October last year, in which they said that they wanted all listed companies in the country to adopt the TCFD recommendations, and also report according to SASB. No, so this is a movement that we're seeing in Mexico, very clear movement. And just to point out the issue of whether it's mandatory or voluntary, you see, I think, Uli, I think that the distinction between voluntary and mandatory is getting a little bit blurred. It's not that, you know, it's not like, you know, I think markets are moving very fast ahead. I hope I have been able to transmit that. And so authorities, ideally, from my perspective, authorities would have to sort of move into the wave, ride the wave, in a sense, or using a surfing analogy. So the authorities would have to sort of ride the wave and really, you know, look into making the TCFD, for instance, which, as I said, is kind of very fast becoming the pillar on which to do comparable sound risk management. And so when and adopt it. And just a final word again on IFRS. So the IFRS, of course, has already decided to work first on climate. I mean, so this accounting decision, very, very important accounting decision, is going to start with climate. And even though the Sustainable Standards Board that they have already decided to create, and of course, when we talk about climate, we are talking again about TCFD. So I'm just trying to give the notion that we are really, from many different perspectives, from investor perspective, from the authorities, international organizations perspective, and now from the accounting world, we are all converging into TCFD. No, so the first thing we in Latin America we certainly need to make aware is that this is coming, and it's coming extremely fast. And so use all opportunities that you have to jump into pilots for the strategy, for the forward-looking pillar in terms of scenario analysis and stuff that is part of the TCFD. No, so because TCFD is also pretty complex, a very complex framework. So with that, I stop, Oli.
Thanks a lot, Rafael. Very comprehensive answer. But let me, and I mean, of course, I agree that TCFD has emerged as kind of the gold standard in the climate disclosure space. But of course, it's a very dynamic area. But let me push back a little bit. I mean, you are, of course, right. You know, kind of sustainable finance has become a mega topic across the financial sector, both in advanced countries and in the developing emerging world. So there's no doubt around that. And, you know, everyone in finance seems to be highlighting their incredible green credentials and, you know, everything great and good they're doing in terms of sustainable finance. At the same time, and you know, there is a greater pickup of TCFD, but at the same time, don't you think, and this is not only to Rafael, but to the whole panel, that there is also a problem insofar as, you know, with these voluntary approaches, you know, everyone can kind of pick and choose what they want to disclose. You know, TCFD is, you know, a very comprehensive framework, but, you know, you can interpret it in many different ways. You can publish highly relevant information, but you can also use it to disclose pretty irrelevant information and kind of not really provide too much material information, I would say. And so don't you think that there is a need for financial supervisors, for the prudential authorities to give a quite clear steer, and not least also with respect to the needs of the supervisors? We have heard from all of you that you consider climate change and also other sustainability risk a material risk to financial stability, which means that the supervisor has to look at it at the level of individual institutions, but also from a systemic perspective. And, you know, the discussions within the NGFS, for example, have always been, yeah, but, you know, we need more granular data, we need to refine our methodologies and so on. So in a way, we've been going in circles. You know, we were saying like, oh, we need better data and you know, to really be in a better position to conduct all the risk analysis that needs to be done at the level of financial institutions, but also at the level of prudential supervisors, central banks for macro-prudential supervision. So don't you think there is a very clear need for having, and pretty soon, not in 10 years, but having clear guidance on what kind of data need to be disclosed, with what need to be collected and so on, instead of having a kind of more laissez-faire approach, hoping that the markets will sooner than later move in that direction themselves?
If I want, I know Rafael probably has an answer as well, but if I think, in a sense, I agree. I mean, there is a role, and that's the reason why we are working and kind of studying and following up all this discussion around disclosure. However, the how is the complex, is the how, the how it's to us, at least at the Superintendencia, the biggest challenge. I agree with Rafael. And that's what we have seen. We have Colombia, we have a very experienced market experience regarding GRI, but we have seen that GRI has not worked exactly because of what you mentioned. They decide what is material. Some of them, they don't even have an external assurance. So they decide, they publish, and they have a GRI report on their self-declaration kind of approach. But that's information that investors are not using, and it's not useful for them. What we have seen, at least in the discussion, and I don't know if Rafael or Carolina agree, what we have seen is that actually SASB and TCFD do have a better approach and kind of compared to, in our case, compared to GRI, be a better solution for making data available that is relevant for investors. In our case, our main priority obviously are investors. So for investors to have the information. But the market doesn't have that much experience issuing, in our case, TCFD. So when I hear you saying that TCFD could also have that space, that even complicates a little bit more on the how, and I think it calls, and it kind of, for me at least, is another excuse to keep the conversation going with investors locally, to really understand what they need. So that's our approach. I mean, we recognize the CFD as kind of a north, like a light we see that, or as a vision. We understand that a lot of alignment is going there, but we are not sure if that's the best way. Is the better one. We see that it exists, but we're not sure. We don't know how the market is going to respond. So we want to have that discussion. But I think again, the how it's the hard part, because and sorry, I'm gonna complement that answer. There is also a very specific thing in Colombia, is that investors are not very experienced investors with ESG integration, so they don't really know. I mean, one of the biggest challenges we're gonna see is that they don't really know what they are going to want once they start refining their methodologies to assess this risk as a risk. So I mean, it's a challenge. I don't know if Rafael has a different view, but to me, that's the biggest challenge. Even though TCFD, to me, or to us, what we have seen, it's something that it provides more relevant information than other frameworks.
Right, and clearly the devil is in the detail. Carolina, did you also want to come in on this point? And
yes. I believe it's very important to understand the difference between the information for the investors, because, for example, when I explain about this framework public in the next days, is the information for investors. But for other side, the CMF work in other or in advance in a specific exercise about stress tests in the financial sector, because it's very important to understand so the idea is to do the first analysis. We'll focus in this in the physical risk and transitory risk. And in this moment, for example, the CMF carrying out this exercise is preparing a database of historical, physical, and transitional risk for Chile. But for this work with the environmental ministry, because the information today is not enough. For example, in the CMF, in this moment, it's not possible to understand how the climate change impacts the financial sector. But for this, work together with the environmental ministry and financial experts. The idea is the environmental ministry give the information, the dates, the specific dates about the impact of the climate risk, and the specific group of the CMF mix this information, these dates, and understand the impact of this risk, how this risk impact the banks, for example, and the insurance sector. It's different use of the information. For the investors, need this information, for example, when they need decided where put their money. But in other side, the regulator need understand how the financial industry management the risk, the general risk, including the climate change risk. Sorry. For other, sorry, in other part, for example, it's very important the regulator, the financial regulator, work together with other regulators or other sites. For example, the Central Bank of Chile or the supervisor of a pension in Chile. This institution in Chile work in a specific group of it's a specific group led by the Ministry of Finances. And in this instance, the CMF and the other institution can share experience with entities about the different experience on different opinions about this situation. And this, I don't know if I give the answer for your question, but the idea, the most important in this is you have different levels of the information. So information for the investors, information for the regulator, information for stress tests is not the same.
Thank you, Carolina. Rafael, do you want to give a quick answer? And we actually have quite a lot of questions that have come in through the Q&A and chat. So I want to turn to these as soonish, but I pushed back on you, so you can push back on me now, Rafael.
Thank you very much, Oli. No, thank you very much for the pushback. In fact, so just two very brief remarks. Indeed, what I was trying to say in my previous intervention was that the dynamics that are currently occurring in different levels in the market and within financial authorities, and in particular, make it the adoption of TCFD something that is becoming, so to say, quasi-mandatory, even without a specific pronouncement from financial authorities in that respect. Now, Uli, also from a Latin American perspective, very, very important to understand that authorities are not always perceived by market actors as in a positive way. No, it's many times authorities are perceived in a negative way. So if we, for instance, decided to engage in a policy to establish immediate mandatory application of TCFD, I'm pretty sure that we would get a backlash in many of the Latin American countries immediately, because they would sense that as was very well pointed out by Mariana and by Carolina, that this is a cost that the authorities are imposing on to do business, and this cost of doing business should be minimized. So we would get immediately, you know, sort of a bargain in a bargaining situation, and so I think it is very, very important for really the authorities to provide the appropriate signal. You know, this is the business we are in as central banks. Our business is to provide signals to the markets. And I think through international institutions like the NGFS, the FSB, through central banks are already or are in the midst of providing very clear signals on TCFD which is again closely tied to financial materiality, no, to investors' concerns, so I would just say that yes, I think, for instance, in Mexico through the Sustainable Finance Committee, there is work ongoing, and hopefully we could, in a few months' time, send a very clear signal to Mexico as to adoption of TCFD. Whether that signal will entail mandatory, a mandatory scheme is yet to be seen.
Thank you, Rafael. I mean, I fully agree about the incredible importance of central banks, also supervisory authorities, sending clear signals to markets. But I mean, my view is that signaling alone will often not be enough. So there sometimes, especially when it comes to prudential actions where you need some very specific data and so on, I do think a mandatory disclosure of certain information is necessary. But I think what Mariana emphasized in her intro statement, the importance of proportionality is really a key issue. I mean, that kind of you can apply to any kind of supervision regulation. Proportionality is always important. And of course, the disclosures you will want to require from small, medium enterprises should look different from large multinational corporations. Of course, there are costs involved, but we also are now very much aware that there are costs involved of not doing anything, because we are facing very material financial risk, and not addressing them will be also a big cost to the public. So we have to bear that in mind. So there's always this trade-off. But we have actually received a lot of very good questions. So let me turn to them, and I will read out a couple of questions. I'll try to cluster them, and then I'll hand the floor back to the panelists, and you can kind of pick and choose which ones you want to address. So there have been a couple of questions relating to disclosure, data, and taxonomy. So Sarah Torres wrote, what initiatives have been done to bridge the ESG data gap? Up to moment, is it worth to purchase ESG data from external data providers? A question from Patrick Flynn, which is more broadly on regulation, but related. So would the panelists be in favor of an overarching global regulatory body that coordinated streamlining relevant standards between central banking economic regions? Then there's a question from Sebastian Sommer from GIZ in Brazil. If you develop national taxonomies, how do you address the risk of fragmentation and increased costs of issuers and investors in a globalized financial sector when having to comply with different taxonomies? One question also from Brazil, from Raquel Breda dos Santos. As taxonomy is key in any approach to reporting, could panelists inform us on which taxonomy they're using, or if they have developed their own? Yeah, so I think I'll pass it back to the panelists, and if you can pick and choose whichever you want, and maybe we just go in the same order as before.
Okay, thank you. I'm gonna try to answer in the same order. If I forget something, Uli, please let me know, like one of the questions.
Yeah, and I mean, you don't have to address everything, because anyway, we still have other questions, and
I think on the first one regarding the data gap and external data providers, I guess it's it's not in my place to kind of advise if they should use or not use. I think the recommendation there is to be to understand what you're purchasing, what's their approach, how do they get the data, what are the data they get. I think this is to me, I think this is the key. And what we have seen in the different workshops we've had with the pension fund administrators, when we talk about this issue of data, they do always try to have a mix of proprietary instruments to capture data and external data providers in order to kind of mix and match and triangulate the information. And I also think that's the best approach. I'm not going to talk about what we've done to bridge those data gaps because that's been half of the discussion. So we're all trying to close that data gap and to improve the quality, comparability, and relevance of the data. So I'm not going to repeat what we have been discussing. Regarding the taxonomies, it's a very good question. And I think it's when you start embarking on these type of projects that are very ambitious, to be honest, for a country, for example, like Colombia in the Latin American market, this is one of the questions that always comes up and that you're worried about. What I do know is first, it's very hard. I think it's almost impossible to have a global taxonomy. I mean, I don't think that's something that is going to happen, that it's easily going to happen. It's actually having something at a regional level is already hard. I don't imagine something global because as you know, the building block of a taxonomy is also the local plans, policies, commitments, especially if those are done in a serious way. They should be the basis of the taxonomy development. So I think it's very hard to have one universal one. However, what we have been discussing and what we have been discussing, for example, at the NGFS level, and that you see that it's important, even from the European perspective on their development, is trying to have principles or the same principles and architecture in its development. So that's what we have done. And that's one of the ways we have kind of minimized the risk of fragmentation. And the cost to investors. Regarding the use of taxonomies for disclosure, I think it's a very, very, very good question because this is one of the things I always try to emphasize when we talk about what we're going to do with our taxonomy. We are developing a taxonomy as a technical document. However, its implementation is not necessarily going to be the same way in the same countries, and Colombia is no exception. So, as you know, for Europeans, the taxonomy it's attached to some type of disclosure regulation. In our case, it's more around labeling, for example. So, its initial driver to develop a taxonomy is to keep market integrity, to help investors and issuers understand what's relevant for sustainable development and for especially climate change mitigation and adaptation objectives. And it's a tool to help find the opportunities and label them correctly. We are not yet thinking of the disclosure type of approach that I know it's the discussion in the country, again, because we're in the initial stages of improving the data and we're talking about these international frameworks. And the implementation of those frameworks are not yet on the taxonomy. We first need to understand if it's going to work for labeling, try to pilot some of its implementation, but it's not yet something that we see associated with disclosure.
Thank you, Mariana. Carolina, I think you're on mute.
Yes. Okay, but the regulator is not alone in the world. Normally, the regulator is part of other more bigger, the bigger organization. For example, Chile CMF and Central Bank is part of NGFS. Participate in BIS, you know, in Basilea, no? IOSCO and others, and these topics discussed in every different organization in this time. When the regulator, for example, prepared a rule, a framework about, for example, these topics, and read information, standard, and other regulation in other part of the world. But more, for example, when in the discussion about the GRI or SASB or others, TCFD, etc., the truth in this moment, these different standards work for creating an complementary standard. For example, GRI and SASB and TCFD and IFRS, for example, try to create it one or big framework for this information, because everybody understands it's not possible work in different standards. It's not possible. It's necessary created complementary and comparison standards and guidelines. When the second question about the taxonomy, yes, okay, it's very important, the taxonomy, but maybe it's not only financial taxonomy, maybe it's necessary national taxonomy, but not national, international taxonomy. But for example, today in Chile, don't have a taxonomy, but Chile has a green bonds, for example, but use the international taxonomy, the international certification. But the war is true. The globalization is true. It's not possible created a standard or framework or taxonomy only for one country. Every time it's necessary, see the rest of the world. Mm-hmm.
Thank you, Carolina. Rafael, back to you.
Thank you. Thank you, Uli. So to the ESG question, which is very, very important. I mean, it's amazing how the market for ESG data providers has grown in the last few years. I mean, it's really amazing the size of the market of data provision. No? If I'm not mistaken, it's expected to reach just this market in terms of revenues per year, $1 billion, $1,000 million. So this is a market that is growing very, very fast. I think we have to understand a few of the elements of this market that are key to the success of it. One is that these data providers and these ETF, ESG ETF providers, you know, in general, they are different from the investors, from the institutional investors. So institutional investors buy ESG ETFs from these data providers, no? And the reason for that is because they to avoid the conflict of interest. Namely, you know, this the providers of ESG ETFs are separate from the investors, so that investors cannot be perceived as manipulating this exchange traded funds. No, so this is interesting because the market has already set up a clear mechanism for the credibility of this ESG data, no? Which is that investors are not selling or able to manipulate this data. So that is indeed very interesting. Now, of course, once you talk about what is it that is relevant, what is material, so we have abused of this term in this session, but I think it's not that the different E, S, and G factors that are relevant are very much very much related to the industry, to the sector. So different sectors have very different material ESG factors. And so these data providers they are very much have worked on it. And SASB is another example of a free a standard, accessible standard that allows you to look into the methodology in which factors are material for 77 sectors. So, so the ecosystem is growing, and even the big credit rating agencies have jumped into this ESG. And they are in the process of starting to integrate ESG factors into their traditional rating, credit rating. No, that is also a very interesting development that is going on. Now, let me move first to the taxonomy questions, and
Rafael, if you could try to be brief, because we have less than 10 minutes.
Yes. So as to the taxonomy, just to underline a point that was made by Mariana. I think very important that when we are typically talking about sustainability taxonomies, at least in Mexico, and sustainability is a more broader point than green taxonomy. And so as to green taxonomies, where a lot of advancement has been done, very key comparability of taxonomies, because we are looking into how to attract international investors into our countries. So the point is, and we don't want to burden these investors with some taxonomies that are not really transparent and clear to understand by these investors. So they want to have something comparable. And I think that was very much stressed by Mariana. Finally, so maybe I should stop here because I took too much time, Uli.
Yeah, I mean, I could listen to you for hours. It's really interesting, but I need to keep the time a little bit. So there are a couple of, and there's certainly so many points I would like to jump on now, but there are a couple of questions I just want to highlight. First of all, from Jeffrey Young, who actually put the first question, so we must have this answered. Could you share any efforts that your organization is embarking on to address the disproportionate financial impact of climate change on low-income communities, which I think is actually a very interesting issue. And actually, I've done some work with the Alliance for Financial Inclusion, where we published a report on inclusive green finance, because there are really important connections here. I don't know if any of you could speak to that. And then I have two questions that I wanted to bring to you. From Fernanda Feil, how to conciliate the long-term needs of the green transition with the short-term needs, or shall I say focus, of the capital market. So she's referring to Mark Carney's tragedy over the horizon. And in that context, what about the role of development banks? Can they work along with central banks in order to green the financial system? And there was also a question from SK Prakash Krishna from India, who would like to know more about the role of the World Bank, IBRD, and if I may add also the Inter-American Development Bank, which has been very active, of course, in Latin America on this. Now, we have basically 5 minutes, which would give us kind of 1.5 minutes for each of you to give some answer, and if you can also wrap in kind of your final thoughts, anything really important that you wanted to highlight. And again, let's go in the same order. Mariana, please.
Thank you, Uli. So for the first one, I mean, we are financial. In my case, I come from the Financial Supervisory Authority. So our main role and mandate is to supervise and supervise financial institutions. So one of the things we do in order to incorporate the social aspect of climate change is actually it's in the exercises itself, and the climate risk assessments itself. I think that's when you start analyzing how this can impact the economy from the macro perspective, then you incorporate how climate change can affect employment, GDP, and that's how you kind of include these social aspects in this analysis and into the financial system. We do recognize that we need, in countries like Colombia, for example, we do need just transitions that are just for society. And an example is obviously coal in Colombia. We have a very big coal mine in the north, a country that a region in Colombia that it's very poor, and we do understand that the exit of this stranded assets going to affect that community and the resources it has to survive. So, I mean, I know it's a very high level answer, but that's how we incorporate it into our work because of the nature of our entity. However, in Colombia, there are different organizations like the Ministry of Environment and other government agencies that address this more directly, with the communities. Regarding the short-term and long-term kind of the tragedy of the horizons kind of question, I think that's part of our work. I mean, that's basically in the center of our works. We recognize that there is a mismatch in the horizon. There is a mismatch in the timing, and that's why we always, especially around disclosure and to keep the same topic, that's why we talk of information that kind of covers the future and that you need to use prospective information in order to make decisions. So that's the short answer to that very complex question, but I mean, it's at the center of our role. And I'm gonna give it to the Carolina and Rafael to give the microphone for them to continue.
Thank you. Carolina, please.
Okay. Chile work in a specific carbon neutral law for 2050. But for this objective, the different sector of the economy and authorities and private sector work for to have information. But when this group thinks in information, thinks in dates for each small territory, information about the specific characteristic of each community, incomes, economic sectors, but to, for example, indigenous population. And the idea is capture the specific details of each community. And this information is necessary mixed with a financial information, or for example, the disclosure information, the framework of a disclosure information about the financial industry. And you need mix both part of information and capture the impact of each project or industry and financial and non-financial companies with this impact in these territories. It's not only the effort of a financial regulator, it's the effort of a country, the different authorities, because the map of the climate change is more of a financial sectors. It's a completely economy. It's part of the completely economy. Mm-hmm.
Thank you very much, Carolina. Rafael.
Okay, I'll try to limit myself to 1 minute. We're over the time. So just very briefly on low-income communities and development banks. So I will tackle them together. First, the just transition is a political imperative. It's not something that it's something nice. No. It's essential for the success. Say, if you want to switch from coal mining to renewable energy, I mean, you have to provide a value proposition to communities, poor communities in Mexico. and you have to support them with retooling, education, retraining. Development banks in Mexico are absolutely essential to finance the big infrastructure projects that are needed for a net zero economy, for a reduced carbon economy. And development banks are very much sensitive to precisely such issues because they are public banks. I mean, this and they are the first ones to adopt the Equator principles and so on in the country. So they are very much looking into this community acceptance of the projects. So this is very fundamental. Thank you.
Thank you so much, Rafael. And I mean, I fully agree that the just transition really is a political imperative. And my sense is that we all agree that the financial sector really has to play a crucial role in facilitating that. And of course, we need all kinds of government policies, industrial policies, fiscal policies, and so on. But certainly there is an important role for the financial sector to play in there. And I think it is important that the institutions that govern financial markets, so central banks, supervisors, really provide the framework and the incentives, and partly also kind of a bit of a push to make sure that finance is going in the right direction. Before wrapping up, may I just ask Adrian to release the results from the initial survey so that people can see them. So I'm not going to comment on them because we're already over time. I'd just like to use my last few seconds to very, very much thank our wonderful panel, Mariana, Carolina, Rafael. It was really great hearing from you, from your work on sustainable finance, how you view this issue and what you're planning to do. And surely we didn't have enough time. There was also a couple of unanswered questions. So that very much suggests that we need to continue this exchange. And hopefully we'll have a chance to do that soonish. So thanks everyone for a great panel. Thanks also the participants for very good questions. And well, this topic will continue. Thank you and take good care. Bye-bye.
Thank you for all.
Bye-bye. Thank you.
Thank you, Rauli.
Thanks so much.
Bye.